Hi everyone. So this is going to be the first episode of the year, right? So this is the beginning of the free mentorship course, which is some analysis that I will drop into this chat that you can follow through. You're going to be able to see live my trading journey, and I will share most of my thoughts intraday about this when I trade. So I'm not going to be actively every day in the charts, but I'm gonna be on average maybe twice a week on the charts, maybe more. So I will drop analysis and teach you in the same way my mentor ICT did, and it's to show you basically live action as we go along. So this is the beginning of the 2024 mentorship free version. Of course, if you want to know more and beyond what is shown here, because you will see some stuff that you don't exactly know and understand, and that is not done to hide you something. It's because of time efficiency, and I want to also reward the people that are investing in me and investing in themselves into be better traders and subscribing to the mentorship and the rest of the course that is going to come along. So I'm gonna also benefit from this episode to share that you guys that the foundation course is being built as we speak. It is being built, well, not technically, but it is being built. And this week, you guys will have advancements on that. You're gonna definitely learn, and even on the free version, you're gonna learn a lot. So I think once you're gonna be at a certain level, you will definitely be interested in getting into the mentorship, right? So perfect. So I just wanna use this live trading session and show you the importance of a law in price. That law being the power of three, because um, the power of three, it's basically a representation of a candlestick. So I'll show you right here. So for example, you have this up closing candle, and you have the open. Here you have the high part, and this was the close basically, right? So the high part of the body is the close, open, close, and the high was pointed by this wick, right? Low part of this wick. I'm just repeating extremely fast. Sorry if this bores you. I just have to. I know some people don't know how to read candlesticks properly, so I'll do that in the beginning. So the power of three, the concept comes along with this understanding. So it means that the first power, it's when the candle opens, right? It opens near this level of the open, right? Of course, I'm telling this so that you can visualize. And then it goes lower part to create this wick. So it kind of does like, let me draw this shape, okay? I'm not an art grad, but this should work. Absolutely not, but anyways, let me show you what it does. Well, actually, I will switch to the bar chart to show you how it's represented. So you see the flow of price. This will be faster. So you open here, price drops here, and then it goes higher. So there's like this notion of price has to drop in order to go higher, right? This means that this, as far as internal analysis, will be called a manipulation swing. Okay? Sometimes it's not a manipulation swing. I'm saying this right now so you can understand the principle, but the low part of this is basically a direction against the move that's going to happen in truth, because if you would be here, you would think, well, oh, it's going down, which means it's gonna keep going down. But in reality, you have to go into the opposite manner first, and then expect the move into your desired direction. So now, if I've lost you, no worries, use the chats, and I will go beyond in the chats, and I will continue giving examples as we go in the mentorship. But I just wanted to show you the flow of price. So open, we drop, we go higher, and then we start. This principle is extremely important because remember what I've told you guys in the episode, I believe it was 0 of the mentorship. Well, I've told you guys that if you guys are going to be people that want to trade in the day, right? You want to buy and sell in the same day, within a couple of minutes, within a couple of hours, um, not more than a day. Well, your goal is going to be to determine roughly where's the next candle going to be. So if you're going to be here and you're going to expect, like this was Friday. So if you're going to expect this candle, well, you have to know what's going to be the trajectory of the price. And as you can see, it didn't went lower and ejected. Kind of like this candlesticks. Now you're going to see it everywhere. You're going to see the flow of price. So price opens up, it drops, and then it goes higher. It makes a high, almost close to the high, but it closed a little bit lower. And same thing here. You see? This. And the same happens on both sides. So if you're expecting a down close candle, so a drop in price basically of the Nasdaq, well, you're gonna say we're gonna open at a level, it's going to go higher, and then it's gonna drop to create the real move of the candlestick, right? Because as you go in the day, you're not gonna see that, like, this candle will not be black or red if you haven't changed your settings, right? You're gonna see it green once you see it opening. And if your psychology is stronger than your understanding and your rationality, kind of, you're going to think it's gonna keep going higher into your higher time frame target and be in a fear, right? Fear is extremely dangerous in trading. You really don't need or should trade with fear. But as we go along, I'll go more in detail. And as you get experience, if you have experience, please share it in the chats. If you don't have experience, well, please also let us know in the chat too, because I can definitely adapt to what I say to what's going to be presented to you guys. So going back into this power of 3 thing, right? So 1, it's the first move. We open here, we drop, and then we go higher. So that's pretty much the power of 3. So 1, 2, 3, right? Now, if we take this concept and we apply it intraday, where would generally be the open, right? Well, that's an easy question because the open is at midnight. So you need to use midnight price level and extend it to your right. So I'm going to keep my arrow here just so you see. So it is 16,441. And if you see 16,440, let's say, well, in this section, we are very close, right? Because let me show you this. So I'm going to take midnight, and voila, it actually shows you my indicators, which you can have too. And the indicators that I have, I recommend you to take a screenshot, but this does not mean I use all of them, because this will not help you that much, but you can definitely take them, but that won't make or break you in the beginning. Like, you need to know fundamentals, but let's start with this, right? So you start here, the midnight opening price, you extend it to your right, and that principle is also something that can help you trade, well, do day trades, right? And you're gonna see the importance of 8:30 price, as I explained this to you guys, because 8:30 had a very important, like, it was a very important price level intraday on Friday, and it is mostly the truth on other days too. If you start by taking 8:30 price, it's gonna act in the same manner, not in the same way, in the same manner than midnight opening, as we go along in the day. So you should definitely take that in note. Midnight opening acts like kind of like a resistance, if you can say, or a support in the day, depending on your bias. So if you think midnight is going to cause the next day daily candle is going to be a no close candle, so the price is going to rise, you're going to use midnight as support when it's going to cross it. And this does not mean that going through midnight it's not going to find resistance in going through, right? Going through price, like if we're here, we start here, it doesn't mean that when it touches it, it rejects it. Like you need to understand that it might do that to fake people that think it's going to go down. So you need to look and try to enter in a manner that encapsulates, again, this power of three principle. There's candlesticks on smaller time frames here. Like, for example, there you go. Let's hide this for now. So price goes higher here. We open at 8:30 GMT, news embargo. We went into a drop, manipulation swing, of course, because you had this zone as support, and you're gonna know this zone only if you go into the mentorship. So that's my way of selling it to you. But this does not mean you don't need this. Like, you can just trade and do your best. And I've also gave you a big hint with the name on the right, so it's not as important. I could go into a much higher detail in this structure, but I'm gonna leave that for the paid content. But still, let's show you here what's up, right? Don't think oh, so you're keeping stuff, it's gonna make me fail. Absolutely not. You don't even need this. This is bonus from the foundation course, right? So we start here, we go into this as a fake out. You would go long somewhere along here. Let's look at the charts, how it did. I did a trade on another account, but I went long only a very small part of this feeling of inefficiency. It was extremely small because I didn't want it to play as much during the day. I had other stuff to do, like create this group and community. So I just went along, probably around here. Yeah, I took the last push towards it. And as I've mentioned, midnight, which I was referring to, midnight opening, the purple line, as you see here, it's not because we think price is going to raise that it's definitely gonna just go through and explode above, right? Here it almost touched it and it then rejected here. So if you're trading on the 1 minute chart, well, you can definitely see the bullish fair value gap being formed here. And as we went along, you would definitely have put buy limits here, buy limits here, and then and why here and here, right? Because you would put one here, put your stop loss probably below this these lows, or this one, and then you would let it ride, right? But this one, it would be a retest of the CE of this gap. So you see there's a mixture of both gaps here. I'll zoom in so you guys can see, right? This is how technical science comes into play, right? So you need to go into the very small details to be able to read price action. So you have a volume imbalance here in between those candles, and you also have one here. So you would take this thing, do it like this, and even then you could use this, and there you go. So you would put a buy limit here. Your stop would be at this low again, because you've already entered here and allowed it to disrespect this, and so your stop would have been here because this is the low of the part forming the fair value gap. So the fair value gap starts here. You would go long after testing this thing. You would go long here, and then add another trailer stop, add another position here, add another position here, as we go into discount, and then just let it ride. You can also look at the time coming soon. Like, the more we get up to 9:30, the more the volatility is gonna kick in, right? So this is a perfect structure to continue. and not be a fake out. Also, if you've traded here and it price moved here and you were expecting it to cross and you saw that it rejected and you sold, well, that's something that happens at the beginning. Like, you're not gonna be a professional. Like, you're not gonna be very good. You're gonna let your emotions be affected by your P&L, and you're gonna learn with time that fear doesn't have a place in trading. You can use it as a motivator when you're not trading, but nothing more than that when you're trading. I think everyone needs to believe in themselves when they're trading, even if they're right or wrong, because at the end of the day, you need to follow a system. So if you follow your system, there's nothing to worry. It's just a system. If it doesn't work, there's nothing personal here. Doesn't work, you move on. But if you don't back test it enough, you might switch systems without knowing that it actually works. So that was my little rant about that. Going to this chart, let's get closer. So I'm going to repeat something I've said in the beginning of this video, just to be sure. So price went above this. I was explaining that price would not directly cross this, like on a 1 minute chart. But if you go on the 15 minutes chart, probably, like you see, it actually did pretty well. Crossed, went higher, went lower with this wick, went higher with this wick, and then closed again. So this could have scared you to here. But if you held your narrative, you're stopping the same place, you would not have been scared up to this move, which was these highs here. The buy side liquidity that we grab around here during London close, which is near 11 o'clock. So that's very nice. And as you can see, we then retraced after during launch period, so 11:15 to 12 to 1. Roughly, there's the launch period. So people go eat, as we say, the bankers go eat, and then just the price go melt, and the central bank chills. And where does it rest upon? Midnight opening. We find resistance here, we bounce up to fill this inefficiency, and then we fail to go higher. A short would have been the best move in this retracement profile during the 2 to 3 p.m. time schedule, which if you are in the mentorship, if you're going to be in the foundation course, you will learn how to play it from 2 p.m. to 3 p.m. every day. So that's something I really want to make sure you guys understand. There's a lot of value that you guys don't even know that it's going to be posted here, but this is the goal of those videos, right? I want to teach you guys, and I want to also tell you how much you're missing, because you really are. Okay, so as we go along, you see the same stuff happens with 8:30, and then we just retrace to end the week. A typical profile when there's no much volume, we're at the end of a cycle, we're at the end of a week. You might see price do this retracement thing. It just slowly grinds up to roughly mid-range of this whole thing. So there we go, 50% right here. And that's something, don't take my word for it. Go into your own charts and see how price does this profile often. It often goes into a premium and then goes into a discount of the range, and then it just melts and goes to equilibrium or 30%. It's something near those things. So I'm sure if we would take the body to body, it would be the same, right? 0.5, let's see, wick to wick. Yeah, a little nearly above 50 there. So definitely this swing was the better swing, because it's usually 0.5 to 30. So that's what you get. You have 8:30 and midnight acting as resistance, and that was the beginning of my bias for this thing. And I think we've had a good amount of retracement. I'm not going to trade tomorrow or Tuesday. I'm going to take it very, very lightly because there is no news. And it's also the beginning of the year, right? So they're trying to build sentiment. So I'm not going to risk as much. I might take 1 or 2 trades, but nothing very big. So this was the first episode of the mentorship, free version of 2024. Stay tuned, and I'll see you on the next one.